Welcome back to our weekly update. I'm Charlotte McLeod with investingnews.com, and I'm here to give you a quick look at our top stories for the week. It was a week of ups and downs for the gold price, which traded in a range of around $23.25 to $23.61 per ounce during the period. Investors were looking toward the release of the latest personal consumption expenditures price index data, which came out on May 31st. It shows that PCE was up 0.3% month-on-month in April and 2.7% from the previous year. Core PCE, which excludes the more volatile food and energy categories, was up 0.2% from March and 2.8% compared to last April. PCE is the U.S. Federal Reserve's preferred measure of inflation and is tracked closely by market watchers trying to gauge the central bank's next steps. April's results were largely in line with expectations, but as some analysts have pointed out, the numbers have gotten quite sticky, meaning that interest rate cuts may not be in the cards just yet. Currently, CME Group's FedWatch tool shows that cut expectations are very low in June and July, with about a 50-50 chance of a reduction in September. The Fed's next meeting is scheduled to run from June 11th to 12th. The silver price has stayed strong since breaking through the important 30 per ounce level, but reports indicate it's heating up even further in China. Bloomberg said imports of the white metal could surge in the coming weeks as traders take advantage of strong solar demand and a wide spread between international and Chinese prices. The premium on the Shanghai spot price rose above 15% last week. I recently spoke about silver with David Morgan of the Morgan Report, and he commented on a different angle for Chinese demand. In his view, if retail traders in China wake up to the opportunity in silver, it could be significant. Here's what he said.
If the Chinese retail market has caught on to the silver market, watch out. I mean, you've got 1.4 billion people. Now, not all of those people are going to be silver, really. But the point is, there's a lot of Chinese, and they love the markets. So that's really the driver, solar and Chinese.
David shared many more interesting points on silver supply, demand, and prices, and I definitely recommend checking out the full interview. The will they or won't they saga between commodities majors BHP and Anglo American has come to an end, with BHP choosing to back out of its takeover plan. BHP and Anglo first confirmed they were in talks at the end of April, and Anglo rejected the company's initial proposal on April 26th. BHP went on to make two other offers, both of which were also rejected by Anglo. The miners agreed to a one-week extension for BHP's deadline to make a binding bid, but by the time it rolled around on May 29th, BHP CEO Mike Henry said the company wouldn't be making a firm offer for Anglo. Investors with stakes in the two companies don't appear overly concerned that the deal didn't go through. One expert suggested to Reuters that BHP can now pursue targets like Antofagasta or Lundin Mining, while another said the company may focus on its own growth opportunities. If BHP wants to make another bid for Anglo, it will have to wait 6 months. I'll leave the links to these stories in the video description if you'd like to learn more. That's all for this week. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.